Stocks in China surging overnight after securities regulators, said that the government would widen access to the capital market. Eunice Yoon joins us now with more. Again, 2 straight days of market-friendly stuff, maybe, Eunice.
Yeah, that's right. Beijing pledged substantial measures to stabilize the market, and investors are really encouraged by that. The expectation now is that the central bank could cut a key benchmark lending rate as early as next week. China continued to fuel this optimism by announcing that it was going to shelve a property tax trial that was planned for this year, and also by slightly shifting its stringent COVID strategy. The authorities now say that light cases no longer need to be hospitalized to preserve medical resources for the sick. It approved more rapid antigen tests for public use, and it's mulling Olympic-style COVID bubbles for factories so that they could stay open despite the bigger outbreaks. The tech hub Shenzhen said that it was going to allow these bubble arrangements for some of its factories to resume work in what they say is an orderly way. Apple supplier Foxconn will reportedly institute a bubble until Sunday. And then Hong Kong also announced that it would rethink its tight COVID restrictions early next week. So in addition, investors were encouraged by an FT report that said that China is now ready to compromise with the SEC on audits, offering more audit information and possibly clarifying a law that currently bars outside or overseas regulators from conducting investigations in China. But just as a word of warning or a reminder that the tough regulatory crackdowns aren't necessarily over, the cyber watchdog also republished its mission for 2022, saying that it needed to clean up the internet and prioritize national security. So we're seeing those two parts of the government, one that prioritizes the financial aspects as well as the economy, really still much in conflict with the national security folks.
Okay, Eunice, this is the easy stuff for you, the business stuff. Anything in the papers that give you any indication on the mood about that recent cozying up with these warmongers in Russia? I mean, do you read anything that people are saying that, tread lightly, President Xi? No. So that statement that we had yesterday had covered a whole host of issues that investors were really concerned about. So what was interesting, though, is that the one talking point that people in the markets are really worried about, and of course everybody's concerned about, is the cozy relationship between China and Russia. But that was not touched on at all. And really outside of that statement, the comments that we're having officially are still very much in line with Russia, even though, there's some tweaking, like I said, on the margins to try to not totally seem as though they're completely in line with Russia. But at the end of the day, it looks very much like they're aligned with Russia.
Shepard Smith here. Thanks for watching CNBC on YouTube.